everyone's taking a different approach. It's a function of where you are in your life cycle, what the prospects for your fundraising are based on returns, but everyone is dealing with that. Even the highest performing PE firms, you're seeing slower fundraising, and in this deal environment, you have to start thinking creatively about how to get liquidity back to your investors. So secondaries, continuation funds, minority sales, private credit, refinancings, all of those things are on the table.
How exciting is, for you, the private equity versus private credit opportunity these days?
I don't, it's funny, I view it all as one spectrum, and I think this is why maybe private credit is growing and getting the attention that it is. Any asset that we invest in, whether it's a company or a piece of real estate, has an unlevered free cash flow associated with it. And as the markets evolve and we innovate, it's really just a question of where do you want to attach to that asset. And in most markets, at the very early stage, sports being one, as Josh and Jason were just talking about, capital structures are pretty simplistic, right? Banks, equity, or banks, high net worth individuals. And as the markets grow and evolve, we all get quite creative and innovative of trying to figure out where we want to attach. And so, private credit, growth in private credit is in fact an extension of people's positive experience in private equity. We're able to go deeper into some of these assets at higher rates of return with more creative structures, but we have capped upside in a lot of these, right? So in some of our opportunistic credit mandates, we're actually creating debt-like instruments that have equity upside. But private equity is critically important for the investor community because it is the only place where you can go get 2 to 3 times your money. So private credit, durable, high current yield, performs through most market cycles, but at the end of the day, your return is going to be pretty range-bound, if not capped.
Now, it was interesting. A day ago, we had a boatload of debate on this stage about private credit risks, opportunities, cracks in the market. So let's hear it from you. Where do you believe cracks are, if there are?
Cracks. I've been in the private credit. So if people are really anxious about losses industry-wide in private credit, you're blowing through trillions of dollars of value in the institutional private equity, real estate, and infrastructure market. So people need to zoom out and kind of understand again where these loans sit, who they're supporting, and the types of investments. That's one. Two, we have close to 4,000 middle market investments at Ares, and the credit performance has been incredibly strong. Default rates are low, interest coverage is healthy, EBITDA is growing in the low double-digit range. So yeah, we feel pretty good about it. I think it's all a little overblown, to be honest.
So another part of the market that I did not get to ask some of our guests about yesterday that you do very much operate in is real estate. Mm-hmm. How much stress is there still in that market right now?
Well, there's more stress there than there is in the corporate market. I think for maybe obvious reasons. One, the asset class runs more leveraged, so it's a little bit more rate sensitive. Two, the maturity wall issue in real estate is probably more acute than in corporate. The reason being there are just fewer levers to pull to effectively restructure or rehabilitate a piece of real estate. So when you think about maturity wall or even modestly underperforming corporate investments, you have levers to pull both on the balance sheet and the income statement to try to grow through it. You own a building, it's leased or it's not leased, the rent covers your debt service or it doesn't, and that's basically it. So the math of the asset class clearly sets up just for more acute stress. That said, when you put office in certain markets off to the side, we are still seeing pockets of strength in multifamily and industrial, which is where we're largely invested. So I think that story will still play out, but I don't think it's going to be a big systemic story. I think it's going to be one that kind of grinds its way out over time.
Whether it's the corporate market that might look to refinance or really restructure to kind of stave off the higher interest rate environment, or if it's real estate where you're seeing private market values really start to bottom in some people's perspective, how much money do you put to work? How big of an opportunity?
Well, as a private market investor, you can't try to perfectly time markets. That's the good news and the bad news, right? You have to be directionally accurate. We get the luxury of not having to pay attention to all of the headline, and volatility that can induce. But the best time to invest, both corporate and real assets, is when you think you're coming out of a cycle. So in real estate in particular, this is a great time to be forming capital, planting seeds, because you want to get out ahead of it. And that's our experience, in multiple cycles. So, it's a pretty good deployment environment. And like I said, we are seeing the pipelines pick up, which is encouraging.
It's interesting. In addition to just deploying for your funds, we reported here at Bloomberg that you're also considering one of the largest private asset manager deals of all time, or at least we've seen in recent years in the real estate world. What can you say about your M&A ambitions of your own?
Well, not to speak about rumors specifically, we've been quite acquisitive, as you know. So if you look at our growth, 20% of our growth over time has come from some kind of M&A. I have a very strong view that these markets will continue to consolidate. And the reason that they're going to consolidate is, from the manager's perspective, there's huge benefit to scale, right? The larger we get, the more people we can have. The more people we have, the more deals we can do. The more deals we do, the more information we get. The better information we get, the better our investment performance, and then we get more AUM. And, so there's this virtuous circle and cycle that scale creates in private markets, and people are beginning to see that. Investors are putting more of their dollars with fewer managers because they see that opportunity for outperformance, and they also see a huge efficiency. So most large institutional investors you talk to will tell you that they're shrinking their investor roster from, call it 100 to maybe 20 managers, to try to drive efficiency and deeper partnership. And the markets are global and globalizing. So a lot of the things that we learned, let's say, over our 25 years here, we can now apply into developing markets like Europe or Asia that are earlier on in their maturity curve. So we will continue to be at the forefront on the consolidation. We want to be a consolidator, not a consolidatee. I think we have a really good track record of buying companies financially accretive, strategically accretive, and obviously driving culture, which I think is important. But we're not alone. So I would expect to see a lot of activity, particularly once you start to see rates come down and capital start to move.
Safe to say you'd be looking for large prey.
Well, it's all relative, right? So what was large 10 years ago isn't quite so large
Finance
now.
correspondent here at the Bloomberg Invest Conference, speaking with Mike Argetti, CEO and co-founder and president of Ares Management. All right, in the markets, we are definitely looking at that weaker yen. Just cannot seem to find some support, particularly against the euro. We're going to go to John Tucker now for a business class. Hey, John.
Yeah, Alex and Paul. Well, you talk about the yen, about 0.6% weaker against the dollar, 160.59. Still intervention talk, as you mentioned. Stocks, as far as stocks in the U.S., they're fluctuating. Market breadth, that does remain weak at this point. And after its rebound, NVIDIA rising ahead of their shareholder meeting. Shares of NVIDIA right now are down about 0.9%. Again, they have turned lower in the session. Katrina Dudley of Mutual Series, she's among investors, still sounding pretty bullish.
We're very positive as we go into the second half of the year. I think that we've got good earnings support. We have a labor market that is not inflationary, and we do think that if I look at the impact of AI and all of those things, we think it's positive for a lot of sectors.
Among some of the other shares on the move, let's take a look at Micron Technology right now. They report after the close of regular trading in New York. Ahead of that, those shares up about 0.75%. Rivian Automotive soaring after Volkswagen said it plans to establish a joint venture and invest up to $5 billion. The shares of Rivian right now, they're up 28%. And yeah, you can call it a bellwether. FedEx shares, they're surging as much as 14%. Biggest intraday gain since June of 2022 after their forecast for adjusted earnings topping estimates for 2025. Once again, S&P 500 right now down 8 points, 5460 on the index. The Dow Jones Industrial Average 129 points lower, and the NASDAQ 100 11 points higher. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so very much. I'm Alex Steele alongside Paul Sweeney. We are live from the Bloomberg Invest Conference in Manhattan, Lower Manhattan, beautiful 225 Liberty Street. We're bringing together leaders from asset management, banking, and private markets. Well, here on set, we have a special guest for you. Rebecca Lynn is co-founder and general partner of Canvas Ventures. Now, Canvas Ventures was founded in 2013 and focuses on leading Series A and Series B investments around AI, say fintech, digital health, a lot of stuff going on in that space. And Rebecca joins us now. Rebecca, thank you so much for joining us.
Thank you for having me.
So what do you like right now? Like, what's interesting to you? What's the market like? Give us some perspective of how you're thinking about things.
Yeah, there's a lot that's happening right now in the market overall. I think AI is creating a real catalyst. We're hearing a lot about, Gen AI with the launch of ChatGPT just a year and a half ago. And the interesting thing is this has been evolving for some time. I mean, we've been tracking the LLM and the AI space for many years. We've had a number of exits in this space, dating back to Siri, in my prior fund, and most recently case text. And so what we're seeing is that Gen AI can really supercharge many of the theses we've had for a very long time in both fintech and in digital health. One example is the ability to actually take all the call volume, for example, off of a physician practice is an incredible opportunity. Wealth management is another company that we recently led an investment in, where the company can actually perform all of the back office functionality that a wealth manager would typically do, and quite frankly doesn't really want to do, right? All of the back office compliance, the emails, the reporting, the generation of reports, things that would take them 10 to 15 hours on average a week, Gen AI can now lift off their shoulders and let them do what they do best, which is really interface with the clients, right?
So one of the things, as I talk to just investors, they're saying, where is that aha moment for AI from an IPO perspective? So for example, for search, we had Google. For social, we had Facebook. Should we be anticipating an aha IPO to come out of Sand Hill Road and just blow the market away?
As an investor in early stage or early growth, right, we actually think the aha moment is imminent.
Okay.
And so what's going to happen is all of these companies that are focused on solving real world problems with AI are going to be acquired by these very large tech companies that have consumer bases they can sell into. And that's what happened with Case Text, right? Case Text had 10,000 of its own users, but their AI product was fundamentally disrupting all of Thomson Reuters.
Oh.
And so Thomson Reuters had said publicly that they were going to invest $1 billion in AI technology because they saw it disruptive to their entire business, right? And instead, they bought Case Text, which they could plug right into their existing customer base.
Do you feel like the regulatory environment is going to allow for stuff like that? Because I feel like if anything, big tech making big deals based on things that they need and don't want to compete against, it's not going to go so well.
I mean, if they truly have a monopoly, right? But I think regulatory right now has bigger fish to fry, personally.
Okay.
How about just fundraising in general? If I have an idea, I go to Sand Hill Road and I try to get some capital. What's it like these days in raising capital? Do I have to have an AI angle? Can I get something done otherwise? What's it like raising money these days?
What it's like raising money. I think it's very like the ecosystem I first came into venture in that 08-09 time period, where the markets were a little bit frozen in terms of early stage. We're seeing a decrease in like the seed and the A funding. Yep. Definitely seeing a lot more down rounds in the later stage. However, that was the biggest fund I've been involved in. That was a monster fund, right? Because what's happening right now is the same thing that happened back then, where venture capital firms have record amounts of cash, but because their valuations of their current companies got so over their skis, they're having to put their money in their current companies and not invest as much in new companies.
Okay.
And so if you kept sort of in a steady pace like we did, you're able to still invest in all of those new early stage companies. But for the early stage company, it's nice because you don't have 50 other competitors being also backed. So you have some runway to move.
In terms of exit strategies, I know you said M&A is you think how it's going to go. What do you think the IPO market does? Like, when does that open up?
So my crystal ball is not here with me today. However, I think it's incredible what we've seen in the pipeline for IPOs, right? Mm-hmm. When we took Doximity public, the rule of thumb back then was, $100 million plus in revenue 30% to 50% growth year over year, profitability, and they were profitable when they went out, which I think is very important. In the hopper, we have companies that have $1 billion of revenue and are profitable. And so I think as soon as...
And they're still private.
And they're still private. And we can talk about maybe why they're still private, but they're still private. And so when those go out and they go public and they have already proven their ability quarter over quarter to hit their plan and to hit their benchmarks and to be able to predict it. It's the number one recipe for success is being able to forecast and predict accurately. It's what we found. I think that's going to bolster the market overall and really open the gates for other companies when that happens.
Real quick, 30 seconds. What's it like for you to raise venture capital money? Are people still looking to put money in venture?
They are looking to put money in venture, but it's tough because people are, for some reason, are focused on these multi-billion-dollar funds, which probably aren't going to return more than the public markets.
Okay.
And so, yeah, for an early stage fund, I think we have a lot of opportunity.
Great stuff, Rebecca. Thank you so much for joining us. Rebecca Lynn. She's a co-founder and general partner of Canvas Ventures based in San Francisco, but she found her way here to Lower Manhattan to be at the Bloomberg Invest conference here in Lower Manhattan. I always wonder what it's like if it's going to be M&A, because it just doesn't seem like the IPO market is as vibrant as I thought it would be. Mm-hmm. Up 15% this year, up 30, 40% off that October 23 low. I mean, back in the day, I could get these companies out the door.
Right.
I don't know what's going on.
I mean, but back in the day, would the M&A market have been as robust as maybe it could be now?
Yeah, I don't know. I'm just thinking this younger generation just not as... just not getting it done. So,
Paul.
Exactly right.
Paul. Are you looking at S&P? Pretty much flat on the day. The Dow's off by 0.3%. The NASDAQ is up by 0.3%. But it's really a story of the weaker yen on this day. It's Bloomberg Intelligence Radio. Happy Wednesday.
Company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. Look at some of the companies we're following today. Let's start out with Paramount Global. They're talking to potential partners for its streaming TV business. This is internationally. They're saying a deal could significantly transform the online service. The co-chief executive officer, Chris McCarthy, making an announcement at a town hall with employees. He says the tie-up could alter the scale and economics of the service, making it profitable and driving long-term value at the company. Partnership could also serve as a model for what the company does with its Paramount Plus service here in the U.S. And Tesla is on the verge of losing a key bragging right. It's held this for the past 6 years. That is, namely, outselling all EV competitors in the U.S. combined. In the 12 months through May, Tesla sold approximately 618,000 electric cars in the U.S. Compare that with about 597,000 fully electric vehicles sold by other manufacturers. This according to the latest figures from Mark Lines, the provider of monthly auto industry sales data. Well, the next week, car makers slated to report second quarter sales. That's going to include popular new models from GM, Hyundai, and its affiliated Kia Motors. So expect Tesla to lose the crown. In the recent compromise of car dealership software provider CDK Global, hackers took the brazen approach of attacking not just once, but twice. This recent high-profile incident shows how cybercrime crews are increasingly turning to more sinister techniques to try to bend major companies to their will, abetted by some new technology. And that is a look at some of the company stories we're following for you today.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Wednesday, everybody. I'm Alex Steele alongside Paul Sweeney. We're live from the Bloomberg Invest Conference right here in downtown Manhattan, bringing together leaders from asset management, banking, and private markets, really private credit and AI. I feel like those are the two big buckets that we've been hearing a ton about. We're going to bring you more from this amazing conference over the next hour. Let's get right now to Michael Barr with world and national news. Michael?
Thank you very much, Alex, Paul, John. The Supreme Court has sided with the Biden administration in a dispute with Republican-led states over how far the federal government can go to combat controversial social media posts on topics including COVID-19 and election security. On a 6-3 ruling, the justices threw out lower court rulings that favored Louisiana, Missouri, and other parties in their claims that officials in the Democratic administration leaned on the social media platforms to unconstitutionally squelch conservative points of view. Bloomberg Law's June Grasso.
Justice Amy Coney Barrett, who wrote the majority, said that the Fifth Circuit here was wrong in some of the analysis that it made, and that they couldn't really show that it was the government that injured the plaintiffs at all these different points.
Bloomberg's June Grasso. In another 6-3 ruling, the High Court pared back a federal corruption law again, saying state and local officials who accepted gratuities are not covered under the federal statute. Home as a free man, Julian Assange is in Australia. Assange flew back to his home country after admitting his guilt in obtaining and publishing U.S. military secrets. Julian's wife, Stella, gave an emotional thank you to millions worldwide.
People working behind the scenes, people protesting on the streets for days and weeks and months and years, and we achieved it.
Asked to the U.S. legal moves over the past 14 years, she called it an attack on the public's right to know, and it should never have been brought. As to what's next, she says right now, Julian needs time to recuperate. President Joe Biden is pardoning potentially thousands of former U.S. service members convicted of violating a now repealed military ban on consensual gay sex. The president says he is righting an historic wrong to clear the way for these service members to regain lost benefits. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex, John.
All right, thanks so much, Michael Barr. So here is an article that's reading quite high in the Bloomberg terminal. It's called Eisler Imposes Bonus Clawbacks as Hedge Funds Face a Talent Fight. And this centers around Eisler Capital. It's a $4 billion hedge fund, and there is a talent war, no doubt, in the hedge fund industry, and apparently they're trying to keep some of their traders from leaving, and they're looking at clawback on their bonuses. Now, I bring this up because I was speaking with a friend of mine who works for a hedge fund. He wants to leave, and he feels like he cannot because everyone who has left has been sued.
Really?
And they're trying to claw back some serious money. In fact, like the reputation now within the company is that you have to be fired. Like you cannot quit. And I wonder, like, what is that?
I mean, and another story, well, it's just, there's really very tough competition for top talent. So this story, when portfolio manager David Lipner said he was quitting billionaire Izzy Englander's Millennium Management to join a rival, the hedge fund countered with an unusual proposal, a 1-year paid sabbatical and an incentive upon return if Lipner stayed. So people, these funds, if they've got a star who's generating money, consistent returns, A, they've always been valuable, but B, as more and more money goes to hedge funds, you got to keep your winners here, and you have to show your limited partners, your investors, that you've got a stable team here, and I think that's what's happening. The really, really top talent is getting, a lot more. They're becoming a lot more valuable. That's what it kind of says to me. So even these big funds, they got to get creative.
But here's the thing: is that non-competes in the world of media, for example, like no one really pays attention to non-competes. Anyone in a contract in media has a non-compete, and like no one really cares. So it feels like, can this idea really be enforced at the end of the day?
Oh, I think because they're talking about clawing back bonuses plus the taxes that the fund paid upon paying you that bonus. So we're talking tens of millions of dollars and more for some of these people. So
yikes.
The dollars are real.
The dollars are real. All right, coming up, Emily Green, head of wealth management over at Ellevest, will be joining us right here from the Bloomberg Invest event. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Alex Steele and Paul Sweeney, we are live at the Bloomberg Invest Conference downtown Lower Manhattan, 225 Liberty Street, right on the Hudson River. Beautiful space here. We got a lot of smart speakers here over the past day and a half here, so a great event here down in Lower Manhattan. Coming up, we're going to check in with Jason Kelly, Bloomberg Originals Chief Correspondent. He's going to talk about some of the panels that he's been on down here and some of the stories he's working on at Bloomberg Business Week, so we'll check that out. He's Originals correspondent there. We're also going to dip into a panel with Raymond J. McGuire. He's a president over at Lazard, so we'll see what's happening in the world of global investment banking. Emily Green, she's head of wealth management at Ellevest. She's going to join us here on set to talk to us about the wealth management business. So a lot coming up in the next hour from the Bloomberg Invest Conference. Right now, let's kick it all off with Mr. John Tucker.
All right, Alex and Paul, right now the market's kind of drifting today in the S&P 500. 394 stocks are lower, just 109 are higher right now. Some of the individual shares on the move, you have General Mills, that's falling. They reported revenue for the most recent quarter. It fell more sharply than expected. They've been dealing with lower sales. Consumers apparently growing more cautious. FedEx helping offset the losses there. They gained about 14%. And then Rivian soaring. Volkswagen says it's going to invest up to $5 billion in the maker of electric vehicles. Janet Mui at RBC Brewin Dolphin remains positive on stocks.
I think there's still a lot of momentum on that AI trade and enthusiasm going on, and there's still a lot of positive sentiment from investors generally. So I wouldn't worry too much about that, and we're still long-term positive.
Right now, the Dow Jones Industrial Average 57 points lower, S&P 500 8 points lower, and the Nasdaq right now is up 22 points. Wall Street's big focus this week. This is going to be on the government's latest inflation report, and we're going to get that Friday, the PCE, the Personal Consumption Expenditures Index. Of course, the Fed's preferred measure of inflation. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash, Alex and Paul.
All right, thanks so much, John Tucker. Appreciate it. Alex Steele, Paul Sweeney. This is Bloomberg Intelligence Radio live from downtown Manhattan at the Bloomberg Invest conference. We want to keep you up to date, though, on all the big market movers. Yeah, we know about the FedEx and the Rivian, and we'll get to that in just a moment. But Nor Melinda is joining us now in studio. Nor, what else are you paying attention to today?
Well, I'm keeping an eye on Moderna. We are seeing that as the second biggest decliner in the S&P 500 this morning, Alex. We are seeing shares pairing their losses, but they were earlier down as much as 8%. Now, this is after the company said that it showed 50% efficacy in preventing RSV after 18 months. So all eyes have really been on that RSV drug over the past couple months. I know we published a story last month tracking this, and it's saying that that RSV shot is 50% effective across a second season. The drug maker also previously cautioned against comparing its vaccine to other rivals, noting that the trials were not head-to-head and used different case definitions for the RSV disease. So all eyes are on that this morning, Alex.
Yeah. I thought, those stocks did so well during the pandemic because they just delivered like crazy. You know, that it was just an extraordinary story, and we all learned about the mRNA technology. I think at the same time. Right.
Yeah, and then sort of how you implement that into other drugs and shots that are in vaccines that may be more effective than the ones they already had. Really, is the question. All right, I teased FedEx. How are we doing with FedEx here after that? They reported yesterday, and they're exploring opportunities for their logistics business.
Right, still watching it. We're seeing shares up as much as 14%. Now, of course, we know this is after that profit forecast beat, and the fact that it said that it'll be buying back 2.5 billion shares of its stock, $2.5 billion of its stock over the next year. And of course, we know the CEO has really been trying to restructure, reorganize the company, and introduce new cost-cutting measures for the company. And the CEO is hoping to merge express, ground, and services units, which of course we do know is a shift from the two-unit structure that we have seen over the past few decades for this company.
Campbell's soup. I love
a fun
Campbell's
one.
Soup.
Yeah. Do you?
I love Campbell's soup.
Is it the sodium that you like?
Right.
It's the sodium.
Yeah.
Absolutely.
Has to be the sodium. Has to be the sodium here. But I thought this was a fun one. We're looking at Campbell's soup. It's being upgraded to overweight from neutral at JP Morgan. Now, the firm noted that this is the first upgrade that it has received to overweight since 2009. And we are seeing shares of Campbell's soup on pace for their best day since March, with shares climbing as much as 3.4%. Now, it's actually, the analyst here is pointing out Rao, I hope I'm pronouncing that correctly, pasta sauce. He says that there should be growth in the Rao brand.
Rayo's.
Okay, Rayo, there we go.
Rayo.
You can tell I don't eat
I'll take
that.
you there sometime.
But it's to provide investors with high confidence that the company can grow its bottom line there with that Rayo brand.
Which is impressive because General Mills had kind of a different story to tell today. They weren't doing so well, just in terms of their margins were actually not terrible, but just overall, the economic slowdown can definitely impact a lot of these guys. And then I also teased Rivian. Is that stock holding on to the gains? What are analysts talking about?
I mean, we are really seeing the main focus here on that joint venture that we're getting here from Volkswagen. And they're promising a $5 billion investment into the company. And this is really much needed, especially as we've been seeing a lot of the EV space struggling, not only with production, but also deliveries. And the stock has paired some of its gains, but earlier surged as much as 37%, teeing it up for its best days since 2021. And we are seeing the idea that it'll be a $1 billion investment initially, and they'll get about $4 billion from Volkswagen over time. And the perk here for Volkswagen is that they'll be getting access to Rivian's top-notch technology that everyone has really had their eyes on.
All right, Nora, we really appreciate it. Thank you very much, Nora Melinda, joining us in the studio, taking us through all the winners and losers of the market. So we're here at the Bloomberg Invest Conference, Paul and I, and apparently they let anyone in to this thing. I mean, it's like open door. You don't have to register. You don't have to be a real person. I'm just kidding. Jason Kelly joins us now. He is chief correspondent for Bloomberg Originals. Now, for those of you who... Bloomberg Originals, your original jam after covering everything with Atlanta was private equity and Wall Street and all the stuff that this conference covers.
Yeah, wow. This is like a little This Is Your Life by Alex Steele with Jason Kelly. I love it.
This is like a redux.
Anytime.
Well, what are you doing here? This is not your thing anymore.
Well, it is, especially because private equity, as you guys know, has invaded the world of sports, and no one really embodies that more than Josh Harris, who, of course, co-founder of Apollo, now has his own firm, 26 North. But, I mean, you think about the litany of sports teams he owns, the 76ers, the Philadelphia 76ers, New Jersey Devils in the NHL, Crystal Palace in the English Premier League, and probably most notably, the Washington Commanders, for which he paid, wait for it, $6 billion.
Oh my God.
So for these private equity guys, Jason, what do they tell you here? Are they, I guess the values never go down.
Right.
But boy, on a year-to-year cash flow basis, some of these teams are really expensive to own.
They're unbelievably expensive. And I would say we probably spent the majority of the conversation talking about just that, Paul, and which is this whole idea of, if you think about, I mean, here's some sort of directionally accurate numbers. $250 million is what Josh and company buy the Sixers for in 2011. That franchise is now probably worth 4.5 to 5, maybe $6 billion.
Wow.
And it's just a remarkable. And so when you sort of press them on, like, well, what's the underlying value? This will be very familiar to you. It's media. It's the media rights, and these are global media properties. Is one of the things that he said, which I thought was really interesting.
As though media rights change from main distributors like an NBC to streamers, does it change how you value it?
It's a great question, and I think we don't fully know the answer to that, except we're starting to get some answer through the current NBA rights negotiations. Those have been publicly reported on a lot. Nothing has been disclosed, but you are seeing Amazon come into that. Netflix is hanging around the hoop as well. What the streamers are proving, at least so far, is that they are willing to pay top dollar because there is so much value in live sports. It's one of the only things that we're really willing to still watch live. Everything else we watch on our own time. I mean, interesting figure I heard literally as I was walking down the stairs, the NHL Stanley Cup Finals the other night on Tuesday night, or Monday night rather, Edmonton Oilers versus Florida Panthers, not exactly the marquee. It's not, Rangers Kings. 17 million people on average. That's a huge number, and just a reminder that when the game is good, people will show up and watch, and therefore there's huge value intrinsic here.
I mean, so for a guy like Josh Harris, presumably he's got a lot of money. A Stevie Cohen for the New York Mets, for example. These hedge fund guys, these private equity guys. Is that the future? I mean, it doesn't seem like a family, can buy a team, or a rich guy can buy. You got to be a
mega rich guy.
Mega rich guy. Yes.
You got to be a mega rich guy. And one of the things that Josh said during our conversation was, it used to be, for a while, even 20 years ago, it's like you needed to be Forbes 400. He's like, now you need to be Forbes 40. What's happening, which is very apropos for this conference for Bloomberg Invest, is they are starting the leagues, the big professional leagues, including the NFL, we're told, are going to start letting institutional investers in.
That's
private equity.
Interesting. Okay.
And so that has happened already in the NBA, somewhat successfully. They are in the process now, the owners in the NFL are, and the commissioner, of validating and sort of vetting a number of private equity firms who will be designed and created, or at least, have a pool of money to invest in NFL teams. They'll be minority shareholders.
Okay.
And, there's a question of, will there be enough liquidity, et cetera, et cetera. But to your earlier point, Paul, the numbers are going up. These are good investments.
And we just saw recently, probably the most recent mark for the NBA was Joe Tsai, who was owner of the New York Nets, sold a piece to the members of the Koch family.
Yes.
An implied valuation, $7.5 billion for a team. So again, the values, I had never seen a markdown. I've never seen a down round for a professional league.
And it could be coming. I mean, you've seen some, the lower tier franchises in Major League Baseball and NHL especially, those tend to be at least, they don't grow as fast. But the issue is that the revenues in most of these leagues, especially in the United States, it's shared revenue. So even if you're the worst team, I have a piece coming out in a couple weeks, tease, about Shad Khan, who owns the Jacksonville Jaguars. He also owns Fulham FC. And one of the things we talk about is, Jacksonville Jaguars, not the best franchise over the past 20 or so years, and yet they still get that big check at the end of the year from the league because revenue is shared equally among the 32 teams.
This might be a really dumb question, and you kind of maybe already answered it, but ROI for this, if we're learning how to value it, We don't know how it's going to be valued in the future. There hasn't been a down round. Like, how quickly do these guys make their money back, or how do they look at it?
Yeah, I mean, that's a really interesting question.
That's his way of saying it's not totally dumb, Alex.
And Josh and I did talk about that on stage, and he said the way that, because they do, like, they pencil it out just the way that they would pencil out any other investment. He said it's sort of low single-digit returns, which is not private equity, but like better than the S&P. It's typically a pretty long hold. I mean, these are not assets that trade frequently, so you do have to
be prepared to stick in it.
Yeah, and be prepared in a down year where attendance is down or ticket sales are down or whatever it is to put more money in. You certainly see that with some of the MLS teams, the Major League Soccer teams, and some baseball teams too, that people have to pony up some money every now and again. But the underlying value of the asset is certainly rising.
I wonder what the next wave is in terms of sports investment. If I can't afford, I'm priced out of the NFL. I'm probably priced out of the NBA. I mean, is it soccer?
I have an idea.
Okay, go.
Pickleball?
Women's soccer.
Women's soccer.
Women's soccer. So we, in the same series that I was teasing ahead to Power Players, I have a feature on the commissioner of the NWSL, which is the National Women's Soccer League here in the United States, a woman named Jessica Berman. We have seen tremendous growth there, institutional money coming in, but also wealthy individuals. Again, sort of basic numbers. 5 years ago, you could buy a team an expansion fee for about $2 or $3 million. That's now up to about $50 or $55 million. So, like, real growth there. But more approachable for someone who's got, a lot of money, but not Josh Harris money.
Right. How active are these mega rich people in the sports teams that they buy?
I think it depends. And, most of them would tell you that their job is really to hire the smart people to make the decisions about, what's happening on the pitch, on the field, or on the court. Having said that, you see, if you watch the NFL draft, a lot of the owners in the draft room, they ultimately have to make the call of, are we going to pay this player $100, $200, $700 million? Obviously, they sign off on sort of those big issues. And what they're really making decisions around are, are we going to build a new arena? Who are the big sponsors that we're going to have, as well as the big personnel moves?
All right, Jason, thank you so much for joining us. Really appreciate it. Jason Kelly here, just giving us a sense of what's happening in this Bloomberg Invest Conference. Again, he was speaking earlier with Josh Harris, owner of a whole plethora of major professional sporting organizations, franchises all around the world, including the English Premier League, and of course, the biggest investment, the NFL. So getting some perspective from Jason. So right now, we're going to go to a really, really interesting panel right now. Raymond J. McGuire, president of Lazard, one of the leading global investment banks, sitting down with us. We're going to listen in right now. Let's go.
As well as the family offices investing in the asset managers, so their assets are growing, and the expectations that'll continue to grow as investors are looking for returns that either meet or beat the capital markets. Fed policy has slowed a little bit of the deployment of that capital, and until we see valuations come in line, my sense is that you're going to see, at least for the private equity side of it, different to how they're deploying other aspects of the overall portfolio. Private equity has slowed a little bit in the activity in terms of private equity's contribution to revenues on Wall Street, 30 to 40% and growing. So we expect that to be continue to be a large component of what's taking place in the capital markets and be one of the drivers.
It looks like there's a fair amount of capital out there to be deployed. Let's talk about the demand side, the need for it. Particularly some big transformations we're seeing, such that we all talk about artificial intelligence all the time these days. And also you've got energy transition. What are the things that are going to demand investment over the next 5, 10 years?
That's a much larger question. That goes to kind of the macro opportunities that we have, and I would put them in 5 categories. One would be generative AI. In the drop-down box there is the amount of capital that we're going to need to deploy in order to support generative AI. Data centers, as an example. Renewable energy or energy transition would be another of a macro trend. And the drop-down box of renewable energy and energy transition is how do we invest in the infrastructure that's going to allow us to remain competitive in energy transition and also be effective in how we go about energy transition. The other is, this is taken on a different nomenclature dependent upon who's communicating. It's either onshoring, friendshoring, deglobalization, or what I would call reglobalization. And the reglobalization means, how do we invest in U.S. manufacturing? Remember, we peaked in U.S. manufacturing in June of 1979, where 1 in 5 Americans worked in a factory in the manufacturing base. Today, that's probably 1 in 20. And much of the dependence that we have in the manufacturing world for all the things that we do are dependent upon supply chain. So reglobalization is going to be another factor. The other factor that I would look to is the largest growing population that exists in North America is 65 years and older. And so how we drop down box, how do we engage in healthcare for that demographic? How do we manage the transfer of wealth or not? And the last is cybersecurity, macro themes. And the investment that we will have to make from the private sector is investment that we also today see being led by what's taking place in Washington. The IRA, as an example, the CHIPS Act, fundamental to how we compete going forward.
Just where I wanted to go, which is the role of private versus public in some of that financing. Because you mentioned the CHIPS Act, which obviously has a lot to do with generative AI. Government's a big player in that. And also energy transition, goodness knows with the IRA, government big player. As we go forward, as you look at it from your point of view at Lazard, what is the right role for the government? What's the right role for the private sector in supplying the capital that's needed?
It's going to have to be a partnership, especially for the elements of the macro trends. In order for us to compete, it's going to have to be public-private partnerships, which we're seeing in many ways, I think, with the IRA and with the CHIPS Act. And look at the number of private enterprises that are involved in that with the support of the government. So there's those partnerships. And each one of these macro themes is going to have to be public-private partnerships. As we reglobalize, how do we invest in the elements of that reglobalization? The way that we do that is through, we need government policy that's going to be supportive, and then we need private enterprise to partner. And across the spectrum, you're going to see public-private partnerships that lead our ability to remain competitive.
Ray, how does that play across national boundaries? You talk about reglobalization. There certainly has been a readjustment, I think it's fair to say, when it comes to supply chains. And we even have a competition perhaps going on with the United States and the European Union right now in some of these areas. To what extent does this inhibit cross-border transactions, or does it enhance them?
Well, what you're going to see is the friendshoring to which I referred. If you look at today, 90% of the manufacturing needs of this country are supplied by China. So friendshoring, if I look at auto manufacturing in our relationship with Mexico as an example, if you look at biopharma and our relationship with India as an example, if you look at batteries and our relationship with Poland as an example, we're going to have to cross boundaries. We're going to have to rely on those relationships that have historically been friends of the United States. As the global north and the global south at some point come together, we're going to have to make certain that we have relationships with our allies in order for us to remain in the lead. And we are in many fundamental ways in the lead, but where we are exposed from a supply chain standpoint, we need to be able to rely on our partners to reduce that gap.
There's a lot of talk about industrial policy and big investments for the U.S. government, and some money, goodness knows, has been appropriated, a fair amount of money. I'm not sure how much of it we've actually seen, as we would say in the business, up on the screen yet. I mean, talk to me, for example, about the Gateway project, which has been on the table here in the New York area for a good long time, and I'm not sure how much progress I've seen made. Is that a warning to us about the ability to actually get it done rather than plan it and even spend money on it?
So Gateway is a great example. As you all know, probably the largest allocation of capital by the U.S. government, where you're going to see prime examples of public-private partnerships. Why do I say that? Gateway, as you all know, is a $16 billion project with 72,000 jobs. And so what that's going to require is, one, the training of a workforce to fill those 72,000 jobs, from engineers to day laborers. And we also are going to need to make certain that from a manufacturing standpoint, that we have the industries that can supply the equipment necessary for us to go and drill.
All right, you've been listening to David Weston speaking with Ray McGuire, president over at Lazard at the Bloomberg Invest Conference right here in Lower Manhattan. Taking a look at the equity market, volume light, stocks are doing absolutely nothing. We have the end of the quarter at the end of this week, and you have to wonder if we're kind of waiting for some rebalancing and some liquidity to really take hold over the next 48 hours. We also have some individual company stories that are quite interesting. We're going to go John Tucker for that with a business flash. John?
All right, Alex and Paul, major averages, they are kind of mixed right now. Final stretch of the quarter, lower to little change. How about we say that? S&P 500 right now, that is down 8 points, down 0.2%, 5460 on the index. The Dow Jones Industrial Average, 58 points lower. That is down 0.2%. And the NASDAQ 100 right now, up just a point. Call that unchanged. Market breadth, that does remain weak, and it has investors at this point asking once again if the stock market is way too reliant on the big tech stocks. NVIDIA Corporation, which has led the market moves in the past few sessions, whipsawing ahead of its shareholder meeting. Right now, shares of NVIDIA, they are down 1 3/4%. Micron Technology's recent rally, that's going to face a test of whether it's jumped a little too far. They're going to report earnings after the close of regular trading today. Shares right now down about 8 cents, 141.06. And FedEx surging on a bullish forecast and also their buyback plans. Right now, FedEx shares, you can also consider that something of an economic bellwether of 14%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, actually downtown at the Bloomberg Invest Conference. We've moved it downtown to the World Financial Center, Bloomberg Invest Conference. A lot of good stuff going on down here. You know, there's one of the great stories in global financial services and wealth management is this supposed transfer of wealth, like $1 gajillion of wealth from baby boomers, of which I qualify by like a year, to like the Gen X and Gen Z. Well, I'll tell you what I've told my kids, 4 of them. The last check I write is going to bounce. So don't wait on me. Get to work and start saving.
No, fair enough.
I understand it's a thing. Emily Green joins us, head of wealth management at Ellevest. Emily, can you frame out what this opportunity is in wealth management? Because people are telling me there's going to be a pretty big wealth transfer over the next generation or so.
Yeah, definitely, and it's already started.
Okay.
So the numbers vary depending on what people say, but it's looking at anywhere from 84 trillion to 129 trillion have been named to actually move to the next generations. There's been a lot of talk of millennials, but to your point, actually Gen X and Gen Z have been talked about a lot more more recently as well. And what people have really forgotten is actually the first transfer is going to go from the husbands to the wives within there. And so we talk a lot about those millennials, but the wives are actually getting the money already. And so this is something that's already occurring. And so you look at $30 trillion by 2030 should have transferred to women.
Oh, wow. Which is really where Ellevest comes in. Your CEO is Sally Krawcheck.
Yep.
And this is all about sort of helping investing in wealth management company that's built by women and for women. How does this differ from another wealth manager, for example?
Yeah, I worked at a traditional wealth manager, one of the biggest wealth manager for a long time. And people often ask us this, and you know, number one, just the numbers of financial advisors. I think what people also forget in this great wealth transfer is that over 50% of advisors are over the age of 55. There's going to be an enormous transfer of advisors as well. We're starting to see it. A lot of people coming to us and saying, advisors, my advisor retired.
Right.
What do I do? And so, and you sit in a lot of rooms, and 70% of advisors a lot of time are over the age of 70 and not below the age of 30. So what's going to happen within here? And so at Ellevest, 83% of our team is women overall. All of our advisors are women. It's very rare within here. And so just that we are her within there, and so that we hear her. And so when women are going through divorce, widowhood, inheritance, all these things that are occurring, that our team actually reflects that has been an enormous way for us to actually gather clients within here. And then the other thing that we really see is these women, this next generation, has been looking for more impact, ESG investing, impact, whatever we want to call it. We can throw a lot of labels at this, but how do we actually align their values to their money?
So, on the first point there, where do you get these young women to be advisors? Where do you get them? Because I know even the traditional investment banks have a hard time.
Yeah, no, it's not easy.
We just went. We just went
Yes.
to an event in Nashville.
Yeah.
And we're just, you know.
It's not easy. I'll tell you that. I spend a lot of time looking at a lot of resumes of people who apply and such. It's not all young women.
Okay.
You know, I have some advisors. I have one of the top advisors on my team, a woman in her mid-50s. She was a large advisor at Wells Fargo for a long time. She went through something that was really soul-searching for her. She had breast cancer. And it made her really realize she needed to do something more meaningful in her life. And so finding advisors like that where, yeah, she was making a ton of money. She was good. She had a huge book of business. She didn't need to leave Wells Fargo. You know, these advisors, they don't need to make that transition, but she decided she needed to do something more meaningful. And that a lot of advisors I find that are in their, you know, mid-30s and trying to figure out, like, how do I make something for myself? And really those advisors who may be at that point where they're going to have children. They're thinking about what their career is going to look like at these big banks, at these large broker dealers, and they start to reflect and say, I'd rather be somewhere like Ellevest. And so we've recruited a lot from these large broker dealers.
Well, I was going to say, what is your recruitment process like? Like, how easy is it to pitch? Like, what's the track record?
It's pretty good. We get a lot of applications. I always joke to people be like, did you see my friend's application? Because I do get the emails. I don't read everyone's application every single day. We get a lot of them.
That's so great.
It's wonderful. And a lot
So what do you look for then?
It really varies within here. So I always tell people I need a couple of different things. And actually my biggest problem of hiring advisors, especially from the big broker dealers, and I worked at JP Morgan where they tell you what to say every day. You know, you're very trained. And is really finding people who can have that ability to think for themselves and to learn and to realize that our business 6 months ago was different than it is 6 months from now, and it will be different 12 months from now. And so how are you actually building with us within there? And then really thinking about that person who is passionate to our mission. I can feel from an advisor if they're just trying to come work for Sally Krawcheck or if they really want to do what we want to do. And it is always amazing. Like I work with Sally very closely. I forget that she's Sally. And people, you know, they want to meet her. They want to go through it. They want to do that. And so we do get a good amount of that within the process too. Of people, oh, wow, Sally. And so you have to work through the people who are going to be able to sit in a room, hold their own, and show that they actually care about the Ellevest mission and that they're going to be able to relate to women.
What's a typical Ellevest client look like?
So
and what do they need?
We have clients, Ellevest overall, we have clients from 0 to tens of millions within there. I run our wealth management business, and so that has kind of two parts within it. We have a mass affluent business and a traditional, like, ultra high net worth business. Our average client sits between 2 and 10 million of investable assets. We do have family offices who come in, and we do a lot of more private investing within there. And so they're typically people who need a financial plan, need that guidance, need some decision making in order to think about what does retirement look like. And I would tell you, none of our clients, I have one client where retirement means golf every day. Most of them, it means I want to leave my huge Mag 7 job and go do something different. I need to do something meaningful. I want to start a business, whatever that means. And us helping guide them through that. And then we invest across all asset classes. So we do stocks, bonds, and alternative investing. And that's where we've gathered a lot of clients, actually, is the differentiated alternative investing that we really do, which is not the big guys. It's not the names that we all know. It's not the, you know, places that all the large broker dealers put on their platform. These are like bespoke managers that could be, you know, 50 to a couple $100 million in AUM managers, and people really leave some of these big broker dealers to have some of these very opportunistic ideas.
So interesting. Really cool. The women who come to you, are they also tend to be married, or is it more just like you really focus on the women's side?
Great question. People ask me this all the time.
Asking for a friend.
Yes. 40% of our clients are actually men in wealth management because sometimes women marry men. It happens. And so most of them are married, actually. And what you find is a lot of times the woman has to have some authority over the money. And so she made it. She inherited it. She's the one who controls it in some way, and she comes, and we have clients who maybe for a little while they manage their money separately, And then a year later, he comes
like,
over
actually,
and he's like, yeah, comes across the corner, comes in that Zoom meeting, and it's like, what about me?
Yeah. Hi. Really amazing. This is such great stuff. I learned a lot. Emily Green, thank you so very much. Head of Wealth Management at Ellevest. CEO, of course, is Sally Krawcheck there. Again, taking a look at the markets, whole lot of nothing happening. You're looking at a bond market, though, is doing something, right? Okay, you got yields up by a little bit there, about 7 basis points in the 10-year as you go into an auction later on today. We also want to keep you updated with all the world and national news on this Wednesday as we head into July and the end of the second quarter. Here is Michael Barr with your world and national news.
Thank you very much, Alex. Paul, John. The U.S. Supreme Court cleared the Biden administration to communicate freely with social media companies in an election year ruling that bolsters the government's ability to seek removal of what officials see as misinformation. The justices tossed out court-imposed restrictions on contacts by the White House and several federal agencies. Also, in a 6-3 ruling, the Supreme Court pared back a public corruption law saying that state and local officials who accept gratuities aren't covered by a federal bribery statute. We're just a day away from the 2024 debate between President Biden and former President Trump. Bloomberg White House reporter Josh Wingrove says the stakes are high for both contenders.
For Biden, the downside, of course, is that if he has a stumble or a moment or a freeze, that will fuel age concerns that have been sort of circulating. For Trump, it's if he sort of says something that he's been saying on the campaign trail to his more red meat type base, that might alienate independent voters. And so both campaigns think that the expectations game might work in their favor.
Bloomberg coverage of the CNN debate begins tomorrow night at 8 p.m. Wall Street time with a special edition of Balance of Power with Joe Matthew and Kayleigh Lyons in Washington and David Gura in Atlanta. WikiLeaks founder Julian Assange is back in his home country of Australia, a free man. After years of avoiding extradition, Assange has admitted his guilt in obtaining and publishing U.S. military secrets. The judge citing Assange's time served. Stella Assange says she was overcome with emotions when her husband arrived.
I heard them cheer more and more and flashes, and then I turned the corner, and then I saw that Julian was coming, and we embraced.
Stella Assange says Julian needs time to recuperate. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks at this point struggling in the final stretch of what has been otherwise a pretty strong quarter. 9 of the 11 major industry groups in the S&P 500, they are lower right now. And the worst performing group, that belongs to energy as oil prices move lower. You also had Federal Reserve Governor Michelle Bowman casting down on whether the Fed's going to cut rates this year, saying she sees upside risks to the inflation outlook and that borrowing costs should remain elevated at this point. Meantime, Neil Dutta at Renaissance Macro is arguing the data do support a Fed rate cut sooner than later.
I think the risk is that the unemployment may rise a little bit, not a lot, but a little bit from here. And with respect to core inflation, there's still a significant amount of disinflation in the pipeline.
Take a look at some of the individual shares on the move. NVIDIA shares right now, they are down about 2.1% after rebounding yesterday from a three-day round, pushing the stock into a technical correction. And then you had some of the data today. New home sales dropping in May. It was the slowest pace since late last year. And, of course, the big data that's coming on Friday, we get the Fed's preferred measure of inflation. And as we look at rates right now, they are higher. The 2-year up 5 basis points, 4.74. The 10-year, that's up 6 basis points. That's at 4.31. Overall, S&P 500, 8 points lower. The Dow Jones Industrial Average down 47 points. And the NASDAQ 100 is 3 points lower. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Alex and Paul.
All right, thanks so much, John Tucker. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio, and we are broadcasting to you live from the Bloomberg Invest conference right here in Lower Manhattan, bringing together the leaders from asset management, banking, and private markets. It's wrapping up in just a few hours, but it's been a really fun day and a half. We also keep you updated on all the fun, juicy Wall Street stories, and for that, we're going to go back to 731 Legs to Sri Natarajan in the Bloomberg Interactive Broker Studio. Sri, you have an amazing big take story that you co-authored, and it's called The Last 72 Hours of Archegos. I can't imagine what reporting this story out must have been like. Can you walk us through, can you give us the cliff notes to the 72 hours?
Look, this is a story that's fascinated Wall Street for much of the last 3 years, right? Bill Huang, out of nowhere, had built up such enormous wealth, had a family office, and yet his wealth had gone from $1 billion to $4 billion, from $4 billion to $36 billion in a span of 6 months. That all collapsed very publicly in March 2021, where in a matter of days he lost his entire fortune. Everyone on Wall Street has been trying to figure out what happened, how it happened, and a lot of the details have been dribbling out for the last few years. But over the last few weeks, in a courtroom in downtown Manhattan, Bill Huang is on trial. Prosecutors accuse him of manipulating markets, of defrauding lenders. But after having spent a lot of time in the courtroom, another key takeaway from it all has been that Wall Street doesn't look all that great. Here was someone whose personal wealth might have been $36 billion, but he had another $125 billion in borrowed money. He had a gross portfolio size of $160 billion, making concentrated bets on much of the same names, and all the banks were largely caught unawares. Yes, they got vague answers, evasive answers, but they also relied on pinky promises, effectively, to give him so much firepower for his bets. And in the end, the banks were burnt badly, lost over $10 billion, and one of those banks, the most badly hit Credit Suisse, doesn't even exist anymore, and you could argue Bill Huang's firm played a key role in that.
So, Sri, what I found fascinating about this article, and it's a great minute-by-minute walk through a 72-hour period when it all kind of came to an end for everyone involved, was that the banks did not know that Bill Huang and his firm was layering on such concentrated bets across various firms. One bank didn't know what the other bank was doing, therefore they didn't know the magnitude of the exposure. How did that happen?
And look, in all the conversations we have, they will tell you, we're not allowed to ask. If you're in the prime brokerage business, if you're in the business of extending leverage to your clients, the client doesn't necessarily have to tell you or show you their exact portfolio. They will claim secrecy. They will claim proprietary information. But at the end of the day, banks can also say, if you don't give me as many disclosures as possible, I will not give you that money. That never happened. These guys would come in and say, yes, we have a diversified portfolio, and yes, don't worry, we have all the controls in place, and it's across a mix of names. And the banks would believe that. Yes, they expect honesty and truthful answers, and if they didn't get that, and you can see why the DOJ wants to go after Bill Huang and Archegos, but just think about it for a moment. You walk into a bank today as a retail customer and want a $10,000 loan or a mortgage, or you are trying to get into a co-op. The hoops that one has to jump through, the signatures you have to get. I mean, to get into a co-op, you will need 3 witnesses, 3 friends, your high school teacher, your college professor, and so many other people.
You're giving over your firstborn, man, if you're getting into a co-op.
Pretty much. And in this case, here's someone who said, I would like $5 billion in capacity. Actually, can we increase it to 10 billion now because my portfolio size has increased? And all the banks are doing, you're sure, you're good for that, right? And we can trust you that you're investing well and you're doing this responsibly. Yep, great. No, they didn't even require written declarations about what the portfolio looks like. These were phone conversations, and that was convincing enough for them to extend this kind of money. And that's why for us, yes, the legal process will follow its own path, and the jury of 12 New Yorkers will decide whether Bill Huang, his CFO, if they're guilty or not on the charges that have been brought against them. But it's not a great look for Wall Street.
So in terms of Wall Street, could this happen again? Or do you think now things will be rethought? Those pinky swears will be by the wayside?
By the way, I was told by one of the editors that pinky swears are the highest grade of promises out there. So if you can't rely on that, what do you rely on? I will make the point, though, that the lack of copycats before Archegos or even after Archegos isn't necessarily a reflection of a new regime of banking, of strengthened controls, of great oversight, as much as in the case of Archegos, there was one man who was willing to take a pliant system to the extremes. There was a lot of noise about bringing in rules. Family offices don't face the same kind of oversight as hedge funds, and there were talks about what can be changed, how the rules need to be modified. Some have been put in place, but for the most part, it's been a lot of talk, and these things take time. The worry still remains, and look, this happened recently, so the banks are perhaps shy of doing this with someone else, but it's not entirely clear to me how they avoid a repeat of this situation if someone else comes along and follows this. You know, you may want to call it what might have looked like genius investing to start with, but really, at the end of it, reckless investing. If they follow the same pattern, can we be guaranteed that there won't be a repeat? I don't know. And Credit Suisse will tell you it doesn't even matter because they don't exist anymore to be able to tell you if there will be a repeat or not. That was the kind of consequence we saw from the collapse of this one firm.
Do we have any sense how this trial is going to go, Sri?
Well, it's fascinating. It's happening in the courtroom of a 90-year-old judge, right? And you have a jury, most of whom all of them had never heard of Bill Huang or Archegos before, and that kind of means that they have been getting a Finance 101. Finance 101 sounds challenging in itself, but then if the prosecutors and the defense lawyers have to spend much of their time trying to explain security-based swaps, margin, leverage, even discuss what meme stocks and what they're not, and have to define for some of these people what Goldman Sachs is. It'll be very interesting to see how it pans out, because when you're listening to some of the arguments in court, when you hear prosecutors talk about a lot of heavy investing towards close of market, they were lifting the firm limit to try and drive the price up. And yet, on counter, you kind of understand that is how business is done on Wall Street. I mean, some of this jargon sounds sinister, but isn't necessarily sinister. But how we see and perceive it doesn't matter. It's what's getting through to the jury. The prosecution rests its case today. The defense gets another couple of days, and after a break next week, we will come back with closing remarks, and then we will get the final verdict on this one.
All right, that's going to be fascinating. This is a fascinating article, big take article on the Bloomberg terminal. You can check it on bloomberg.com/big take as well. Sri Natarajan, Bloomberg News senior finance reporter on the big take story, the last 72 hours of Archegos. And I've been reading it this whole time here. It's just minute by minute and it is a really amazing look at this explosion. We'll have more coming up. This is Bloomberg.
company news headlines on Bloomberg Radio.
And I'm John Tucker, the newsroom. Look at some of the company stories we're following. Well, maybe you have a Tesla or Rivian. Where do you plug it in? A study led by a Harvard Business School fellow has found broken and malfunctioning chargers, erratic charging pricing, and drivers of regular cars who park in spots reserved for electric vehicles are a significant obstacle to increasing EV sales. Based on a decade of data obtained by EV driver reviews of charging stations, the research finds that charging stations in the U.S. have an average reliability score of just 78%. That means about 1 in 5 don't work. That's less reliable on average than regular gas stations. Bloomberg ENF earlier this month slashed EV sales estimates and warned the auto industry is falling farther off the track toward decarbonization. Food and Drug Administration inspectors found that Bimbo Bakeries USA, that includes brands such as Sara Lee, Thomas's, Entenmann's, and Ballpark Buns and Rolls, listed ingredients like sesame or tree nuts on labels, even when they weren't in the product. Why? It can be difficult and expensive to keep sesame in one part of a baking plant out of another, so some companies began adding small amounts of sesame to products that didn't previously contain the ingredient to avoid liability and cost. And Big Mac trounces McPlant. McDonald's test of its plant-based burger in San Francisco and Dallas was not successful in either market. This according to Joe Erlinger, the chain's U.S. chief. He says consumers aren't looking for McPlant or other plant-based proteins from McDonald's. He was speaking at the Wall Street Journal Global Food Forum taking place in Chicago. Look at some of your company news today.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Wednesday, everybody. This is Bloomberg Intelligence Radio. Alex Steele, Paul Sweeney, and we are here in downtown Manhattan at the Bloomberg Invest Conference, just wrapping it up here. Some party music going on. We're going to keep you updated on all the world and national news. For that, we go to Michael Barr. Michael?
Thank you very much, Alex, Paul, John. The Supreme Court sides with the Biden administration in a social media dispute. Former federal prosecutor Scott Frederickson.
It was a 6-3 decision. Supreme Court sided with the Biden administration, saying it can reach out to try and urge social media platforms to remove misinformation.
Former federal prosecutor Scott Frederickson. Also in a 6-3 ruling, the Supreme Court pared back a public corruption law, this time saying that state and local officials who accept gratuities aren't covered by a federal bribery statute. The ruling undoes the conviction of former Portage, Indiana Mayor James Snyder for receiving $13,000 from a trucking company after it was awarded city contracts. Moderates claim the victories in some of the latest primary races across the country. Progressive Squad member Jamal Bowman lost his primary in New York to George Latimer, who had major backing from the American Israel Public Affairs Committee. And Trump-backed candidates lost in the race for Utah Senator Mitt Romney's seat and in a runoff election in South Carolina. Bloomberg government's Jonathan Tamari says the result in New York could send a message to Democrats.
We've seen over time that Democratic voters and Democrats succeed with more moderate candidates. Biden himself is an example of that, right? I mean, he beat Bernie Sanders, was his main rival, who he defeated in the Democratic primary in 2020. And so you see that that is still how Democrats win.
As for Republicans, Bloomberg government's John Tamari says the result in Utah could be an outlier since that state tends to be less supportive of former President Trump. The Metropolitan Transportation Authority plans to defer $16.5 billion worth of capital upgrades to modernize New York City's aging transit system, including extending the 2nd Avenue subway to Harlem. It comes after Governor Kathy Hochul paused a congestion pricing plan that would have funded such projects. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex, and now Charlie.
All right, thank you so much, Michael Barr. So here was some eco data we got out about 2 hours ago, but I think it's worth kind of spending some time on here. New home sales in the U.S. in May slumped, decreased 11.3%. That means 619,000 at an annual pace, the slowest since November. Now, in some respects, it's not a surprise, right? Mortgage rates are higher, et cetera. But the problem is we have such a lack of home supply that if we cut back on new home sales and new supply, that's going to be a really big problem as we go forward.
It's going to be a really big problem. And, you know, the only thing that's been kind of saving the housing market has been these builders have been building like crazy to meet the demand. We now have mortgage rates 30-year fixed now below 7, still 6.9 handle, so it's still well high relative to the last dozen years, but it's below 7. A lot of folks in the real estate business say it's maybe has to be 6 or maybe even a little bit below that before you get some owners of existing homes to sell their homes knowing that they're going to have to go get a mortgage around 6%. I don't know about that. Yeah, so
maybe with a 3 handle, I'll consider it. But, you know,
yes,
fair enough.
Yeah,
I'm a whole different story. I'm 2.75%. But the reason why I know the reason why I found this interesting though is it also came at the same time that the Wall Street Journal had an article about KKR and that they had the largest ever purchase of apartment buildings, having paid over $2 billion for about more than 5,200 units, because they see lower supply for housing, which means more renters and higher rents and faster appreciating rents. Well, what's that going to do to the EOR and to inflation, et cetera?
Exactly right. You would think that'd have an upward bias towards inflation here. It's certainly the case here in New York City. I don't hear anybody getting deals or seeing lower rents or any of that type of thing. And you know, even in certain parts of the country where they built aggressively during the pandemic, you're starting to see some of those markets weaken in terms of that because they just built so much in South Florida. places like that.
Yeah, that's such a good point. That wraps it up here. Bloomberg Invest Conference has been really fun. We'll be back in Interactive Broker Studio tomorrow. Coming up, Balance of Power with Joe Matthew. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The Supreme Court sides with the Biden administration on influencing social media. Well, kind of. Welcome to the fastest show in politics as the High Court today rules on White House efforts to combat misinformation online. Sites like Facebook. We'll get more on this and tell you what this ruling is really all about with Bloomberg's legal reporter Eric Larson with us in the Capitol today. We'll set the political baseline ahead of tomorrow night's debate. We're just over 30 hours away. Ipsos's Cliff Young will join, and with more on preparations, we'll talk to Bloomberg Politics contributor Rick Davis. He's been there. It's all after a look at Wall Street. We start with the markets, as always, right now, and Charlie Pellet in New York. Hey, Charlie.
Thank you very much, Joe Matthew. Indeed, we got our own debate all about valuations. Have we come too far too fast as we almost wrap up the trading month of June? Right now, we've got the S&P pushing higher. In fact, trading close to session highs. S&P right now up by about 3 points. A little changed, up less than 0.1%. Dow Industrials up 19 now, up less than 0.1%. NASDAQ up 63, a gain of 0.4%. Stocks, however, are struggling in the final stretch of a strong quarter that has seen a small group of high-flying tech shares lead the way. NVIDIA, by the way, down today by 1.4%. 10-year 4.30%, 2-year 4.74%. Gold right now lower by 0.6%. 2,300 even right now on spot gold, while West Texas Intermediate crude down 0.2%, 80.64 for a barrel of WTI. Certainly, the looming presidential election is sparking a lot of debate about the impact on financial markets and ultimately the fate of Fed Chair Jay Powell. Sarah Wolf is U.S. economist at Morgan Stanley.
We don't think that the election should really be impacting what the Fed's doing. I think Jerome Powell wants to end his tenure on a note with a really good reputation. And so they're just going to be focused on the incoming data going into the election, not all the other noise and what sentiment is showing. I also think that there's been this shift to look much more closely at the hard data than the soft data, because the soft data has been so influenced by what's happening politically in the U.S. and more globally with geopolitics as well.
Sarah Wolf of Morgan Stanley. FedEx, after earnings, surging now by 14.6%. Rival UPS up by 2.7%. After the close of trading today, we hear from Micron Technology. Micron up 0.2%. Again, recapping, S&P close to session highs, looking at a 3-point gain now, up just under 0.1%. Balance of Power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. Charlie Pellet with his eye on the markets for us, as he does every day. We'll get back to Charlie a little bit later on this hour. As we talk politics, we always keep an eye on the markets for you here on Bloomberg Radio, on the satellite, and on YouTube, where you can find us right now. Search Bloomberg Global News, and you'll find our live stream. We always save you a seat here in the studio. With 30 hours, roughly, to go until the grand debate. Joe Biden's up at Camp David. We've been through this. Donald Trump's riffing with the team. Primetime coverage here tomorrow on Bloomberg. And interesting to think of what Donald Trump might be able to say now that the gag order has been somewhat relaxed in the hush money case. Does that change the contours of the debate? We'll talk about the gag order, because I'm glad to say we're lucky to have Eric Larson with us in Washington. It's not because of that. It's because of the Supreme Court. We all started our day early today waiting for rulings. This is the beginning of a 3-day tour with, a dozen rulings left, some of the biggest cases, including the granddaddy of them all, presidential immunity. And it looks like they're going to kick that one to the end, just like everyone has been guessing. Today was about social media. Really interesting here. The Biden administration has been criticized a lot for trying to have misinformation, things about COVID or the 2020 election results pulled down from sites like Facebook when they happen. And this has become a big legal tangle until today the Supreme Court weighed in, a 6-3 ruling, and Eric Larson is here to talk to us about it, Bloomberg legal reporter in the flesh. It's great to see you, Eric. Thanks for coming along. We need to be careful with the way we characterize this, right? The court did not say what the White House did was all right.
Right.
They just didn't have standing to bring the
That's
case,
correct.
the challenge they brought. So tell us what just really happened.
So it was a 6-3 ruling finding that the plaintiffs, including the states of Missouri and Louisiana, did not have legal standing to bring this lawsuit in the first place. So even though the Fifth Circuit Court of Appeals agreed and it ruled in favor of these states, the Supreme Court said, no, actually, you did not prove that there was any, that you had been injured in any way by these, the outreach between the White House and these social media companies. So they explicitly said this is about standing. We're not resolving this First Amendment issue. So even though this helps the White House in terms of this upcoming election, for now, it leaves unresolved the question of whether or not it's appropriate for the White House to reach out to the social media companies and try to have them take down misinformation and disinformation.
So that's technically not settled.
It's not. It's
something?
not. But I'm sure it's a relief, though, for the White House now going into this election, because as we remember from 2020, there was so much misinformation and disinformation around COVID and election fraud and things like that, and that's what this was all about.
So with that said, this is not the first time this court has called out or ruled based on lack of standing in this case. This has kind of become a hallmark of the term.
Yeah, and it's actually interesting, too, because it's now the fourth time that the Supreme Court this session has overturned a high-stakes decision coming out of the Fifth Circuit Court of Appeals, including the ruling over access to the abortion pill. So it's interesting to see this conservative-leaning appeals court being overturned again by this conservative majority of Supreme Courts.
Interesting, the breakdown here, 6-3. Amy Coney Barrett on the other side of the other so-called conservative justices in this case, in the opinion that she wrote. What do you make of that?
I think that we've seen this before, where she's aligned herself with some of the more liberal justices, not totally aligned, of course, but in coming to a conclusion that can get this kind of majority together with otherwise pretty divided courts.
So we've got a lot left here. I guess the strategy is you leave all the big stuff to the end, and sure seems like I mentioned our 3-day tour. We've got tomorrow and Friday. I suppose they could add more days. But the big one, as I already mentioned, presidential immunity. We've talked about that a lot here, Eric. The others are important, too. There's another abortion ruling at hand coming out of Idaho.
Yeah, that's a serious one. The state of Idaho sued to challenge the federal rule that requires hospitals to provide emergency services and stabilize people who come into hospitals, even if they don't have insurance, and that includes stabilizing women who are pregnant. And so some have argued that this federal law requires hospitals to provide abortions to women whose health is at risk because of their pregnancy. And a lot of conservative states in particular have said, no, let's leave that to the hospitals to decide. And a lot of abortion rights advocates say that this puts women's lives at risk. And so that's a big ruling hanging out there.
So Idaho says its hospitals should not be forced under what is the Emergency Medical Treatment and Labor Act. Federal law overrides that. Is this something that will be a clear-cut decision?
It's totally unclear, honestly. Okay. It's the rule is called EMTALA, is what they refer to it as, and it could be a narrow ruling where they just say that Idaho's abortion ban can be left in place because the state has enough rules and regulations in place on its own to make sure that women are protected in these types of emergencies, or it could be a broader ruling that says that this EMTALA law must be respected in all states no matter what.
This has been a great primer because all this is going to fall on, well, you, on one of these mornings really soon. Lastly, Eric, real quick, the gag order relaxed for Donald Trump. What does this actually allow him to say? He can't call out people by name still, but he can talk, I guess, vaguely about witnesses?
He can talk as much as he wants about the witnesses now, actually. The
judge he can call them out.
Yeah, the judge said the trial is over, the proceedings are protected. He can talk about the witnesses, and he can even talk about the jury, but what he can't do is identify the jurors themselves. That's still an anonymous jury. and he's not allowed to identify them by name or call them out individually and to protect them.
But he can talk about Michael Cohen, Stormy Daniels, all he wants on Thursday night.
And he also still is not allowed to talk about court staff.
Okay,
so
got you. At least the jurors, I guess, will be protected. Eric, great to see you. Good to see you in Washington. You know it's big in town when Eric Larson shows up from world headquarters in New York, and we will let you know 10 a.m. next 2 mornings what we learned from the court. So yeah, tomorrow night could be a ripper as the gag order is relaxed. The media and the campaigns continue to raise the stakes, and we wanted to get the baseline roughly 30 hours out here. Well, we'll call it a day out, even though our coverage starts at 8 tomorrow night. With Cliff Young, of course, the brains behind Ipsos U.S. public polling. He's the president of Ipsos Public Affairs. And Cliff, it's great to see you. Welcome back. Speaking from sort of a 30,000-foot level, yeah, how would you describe the state of polling? And you might want to focus on swing states. I know you have some new numbers there as these two candidates walk into the lion's den tomorrow.
The polling, and the polling's been like this for the last year, is basically flatlined. Ultimately, President Biden is in a weak place. He's been weak over the last little bit. And I would ultimately say going into this debate, he has a lot more to lose than Donald Trump does.
It's interesting you say that because the Trump campaign until the last 24 hours seems to be essentially raising expectations. Or I should say that in the opposite. The last 24 hours, they've been raising expectations. So far, though, until then, Donald Trump has made Joe Biden sound like, he's going to be drooling at the podium. He can't stitch 3 words together. And that kind of creates an interesting scenario for the president, doesn't it?
Yeah, he has to go in, that is, Biden has to go in and show that he's competent, that he's presidential, that he doesn't have a cognitive agility problem. And ultimately, as I was saying, he has to show more. He has, in some ways, more to lose, more downside than Trump. The American populace expects Trump to be irreverent, to be kind of all over the place. That is his style. That is not Biden's style. And Biden really needs to show himself to be one that can be president again.
Cliff, you have a line in your swing state right up here that jumps off the page. We at Ipsos like to say the candidate who performs better at the main issue wins the election roughly 85% of the time. So we're going to isolate that issue tomorrow night. I assume it's going to be the economy. Talk about what we'll hear from both.
It's inflation more specifically, but yes, the economy. On the one hand, Trump goes into this debate already being credible on it. Republicans tend to be more credible than Democrats on the issue of the economy. As long as he doesn't sort of deviate too much from the diagonal, he should be okay. And on the other hand, Biden has a problem. Biden has tried, and the administration has tried to make the economic argument. Remember Bidenomics. In any case, it hasn't happened. That connection hasn't occurred for large swaths of the population. He's not performing well on the economy. That is, Biden isn't. And he, at the very least, has to plant some seeds, some kernels in the American populace's head that he is competent on the issue of the economy.
We've been asking a lot of questions, Cliff, about who's going to watch this thing. We're all running this debate as if it was an old-fashioned commission debate. But everyone's online. And, how many young people are watching appointment television if it's not a sporting event? And even then, you might be watching the highlights on social media. Your poll found 31% of Americans living in swing states, this is the audience that counts for the debate, say their main source of news is social media. So that creates an environment where everyone's just going for a viral moment, right?
Yeah, true. But the media landscape is much more fractured today, Joe, as you know. I would say that it's not about watching it in real time, in the moment. It's about the after effect, the day after. I would say we need about 5 or 6 days before we can have a good read on the relative performance. So one way or another, a big chunk of the American population will have some sort of contact with the debate, even if they haven't watched it real time.
We saw a little bit of a bump for Joe Biden following the State of the Union. It was not the classic State of the Union bump that you would see. But there was a kind of a temporary thing, I guess, that happened there. Cliff, you can put a finer point on it if you want. But what does history tell us about this first debate impacting numbers on the other side?
Well, for the most part, overall, historically, debates don't have an effect. They're a wash. So you might have an extraordinary one, like the Obama-Romney debate, where Obama performed poorly. It really affected the polls. But for the most part, they don't have an effect. That said, this is a very unique debate. It's happening before the conventions. It's not happening by the standards that are set by the debate committee, right? It's very unique. And it's one, once again, that's really needed by the Biden camp. They really need to show themselves, or he needs to show himself to be competent. Trump, much less so.
You find likely voters are concerned about inflation and immigration, and those people prefer Donald Trump. I think it was 50 to 47%. If that's the big issue, as we've established here, it's going to be inflation. That's the issue that's going to likely decide the election here. Does Joe Biden just go in and talk about deficits if Donald Trump's tax cuts are made permanent or extended? The inflationary impact of tariffs? Are we going to hear in 90 minutes of this?
Yeah, the abstract talk will not help Biden. What's happening in practice, in reality, is that the average American is not feeling it, not feeling the vibe, is having problems making ends meet. And if he goes in there and talks abstract rates, averages, these sorts of things, he's going to lose people. He really needs to talk about feeling and emotion and connect with them at that level.
How does Trump lose people? I mean, I know there are kind of no rules for Trump aside from the debate rules themselves, but if he goes in there and starts talking about the late, great Hannibal Lecter and electric sharks and all the rest of it, what's that night going to look like for him?
It's going to be fun. It's going to be fun to watch. Obviously, I don't think there's much downside when it comes to Trump. I think
there's no downside. What a world.
Not on those sorts of issues, no. I mean, it's all baked into the numbers. And so the people that love him, love him. The people that hate him, hate him. And by the way, even the people that hate them secretly like to watch him perform in public settings like that. So I really think that the downside's much larger for Biden and much smaller, if non-existent, for Trump.
This is really something. Joe Biden better get his rest. I know that we've been talking a lot about the preparation here, whether you're going to be doing mock debates or murder boards, or how Donald Trump isn't doing the traditional preparation. Is not the most important thing for Joe Biden to get rest?
Yeah, you have to go in there and be spry, right? You have to be agile to the extent that you can. Yeah, good night's sleep, obviously, will be really important, maybe a nap. But ultimately, he needs to show, that is, Biden needs to show Americans that he's presidential, that he's up to the task.
Maybe someday I'll take my own advice and get a full night's sleep. Cliff Young, it's great to see you. Good luck with your watch party. Something tells me you'll be in the field during or after, and I hope you'll come back and talk to us about what you learned. He's the president of Ipsos U.S. Public Affairs, with his eyes on the numbers. One of the great pollsters we talk to on the regular here on Balance of Power. To give you a sense of where we are walking into this, clearly the burden on Joe Biden, according to Cliff Young. And we'll be talking to some smart folks over the course of these 2 hours about that. In fact, Wendy Benjaminson will be in next with our eyes on primary results. We got to talk about what happened to Jamal Bowman and Lauren Boebert, among others, last night. New York, Utah, Colorado. It's coming up next on the fastest show in politics. This is Bloomberg.
Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, now NASDAQ, all advancing. 2-point gain on the S&P, back at 54.71, up now by less than 0.1%. The Dow also up less than 0.1%, higher by 26 points, while NASDAQ is up 56, a gain of 0.3%. 10-year 4.30%, with a 2-year now yielding 4.74%. Gold down $18 the ounce, down 0.8%. 23.01 right now on the precious metal, while West Texas Intermediate crude oil is lower, little change, down 3 cents a barrel, $80.79. Bottom line here, we do have stocks struggling in the final stretch of a strong quarter that has seen a small group of high-flying tech shares lead the way. Nvidia, by the way, down today by 1.5%. Rivian shares soaring now by 22% as Volkswagen plows $5 billion into a tie-up with Rivian, which is the closest would-be rival to Tesla. Again, Rivian up 21% right now. We've got Volkswagen, the ADR is down 1.6%. Among other EV makers, Tesla up 3.5%, Lucid up by 4.4%. Again, recapping, S&P up 2 points, a little change there. Balance of Power continues, and back we go to Washington. Once again, here is the host of Balance of Power, Joe Matthew.
All right, Charlie Pellet, thank you. Welcome to the fastest show in politics. It is the Wednesday edition of Balance of Power. That means debate is tomorrow, and we're spending some time getting ready, much like the candidates are. But this is the day after primary as well. And some of the results, boy, the polls were actually dead on the money in New York. We talked about Emerson College showing Jamal Bowman down by 17 points. That's how much he lost by last night. Everyone loves writing the headline. Media funny, you know. The first member of the squad loses. It just writes itself. But when you look under the hood a little bit here, it's a little bit more complicated than AIPAC dumping a lot of money into the race. And you wonder how much of this had to do with Jamal Bowman. And that's why we turned to Wendy Benjaminson for this, among other things. Bloomberg Washington senior editor with us here at the desk. Wendy, great to see you. AIPAC did put a lot of money into this, $15 million. They set an all-time record.
Yeah.
But Jamal Bowman was talking about the South Bronx at his rally on Saturday night, and that's not in his district.
Right. I mean, yes, AIPAC put a lot of money in. George Latimer might not have done as well as he did had AIPAC and others not funded it so strongly. But Jamal Bowman needs to look in the mirror a little bit this morning and see what he did wrong. Yeah. Remember, he's the guy who pulled the fire alarm in the middle of the debt ceiling thing at a time when Democrats were trying to present themselves as the serious party against the more, you know, the MAGA types like Marjorie Taylor Greene or things like that. They were going to be the party of serious policy. Yes. Let's get things done. And then their guy pulls the fire alarm. So there was that. It turns out he was peddling a 9/11 conspiracy theories. His remarks against Israel were not just against Mideast policy, but kind of veered a little over the line in a district that includes parts of the Bronx, but is mostly Westchester County and has one of the highest Jewish populations in the country. And then on top of that, he does this rally this weekend outside of his district and says it's not about the New York 16th. Well, to the people in the New York 16th, it apparently was about the New York 16th.
Well, that's right. And a lot of the ads against him were about his votes against Biden initiatives, infrastructure, debt ceiling.
Right.
That, to your point, he pulled the fire alarm around that time.
And that's why Hakeem Jeffries, represents Brooklyn and is the Democratic leader of the House, did not really break a sweat trying to help him get reelected. He put some money in from his leadership fund, and I think he may have spoken at one event, but it wasn't. I mean, if Hakeem Jeffries wanted Jamal Bowman reelected, he would have been reelected.
Yes.
And it just, the House was sort of like, oh, okay.
So when you look across the landscape, and I always get an honest answer from you, whether we talk about the way media are covering something versus reality, is there a trend story here? Was this a good night for the center, or does each race have its own quirk?
Yes and yes is the honest answer. I mean, we're always trying to find patterns in the chaos, right? I mean, and remember that voting is an extremely human event where people bring a lot to their vote and put a lot into it that they bring to their table. However, in Utah, in the race to replace Senator Mitt Romney, who is a very strong Trump critic and is one who seems to have survived the sort of, banishing into the wilderness that people like Liz Cheney suffered. He was the person who won the Republican primary for a U.S. Senate seat in Utah, was the Romney 2.0 type, the sort of centrist moderate who's not a fan of Trump, and he beat a guy endorsed by Donald Trump, which again shows you the limits of the Trump endorsement. And then again, there was the Jamal Bowman race, and yet AOC, who we talked about yesterday, was was becoming much more of a mainstream Democrat. She won her seat. So there are plenty of signs that voters are maybe tired of all of the extremes, which doesn't speak well for Donald Trump unless they want Donald Trump at a more level Congress. The Lauren Boebert, she won her.
Yes, she sure did.
She is certainly the right-wing equivalent of the squad in that sense. But her district, she moved to a district that is very MAGA-friendly. Yes. And in fact, a few years ago voted to secede. Some counties in her district voted to secede from Colorado because they thought Colorado was becoming too liberal. Wow. So, yes, that district elected Lauren Boebert.
She would have lost if she had not moved, was the idea.
She probably would have lost.
She showed up with Trump sneakers on last night. We looked at this picture, the gold sneakers. Remember, there was a big thing. Everyone paid $500 for these, but then had to cop to the media later that they were fake and they were made in China. Is that MAGA?
Yeah. No, well, it's not MAGA, except that it's probably much more like many MAGA people who can't afford whatever the heck Trump sneakers cost.
I can't.
Yeah, I'm not sure we can afford them. But but yes, I mean, that's just one of those unforced errors that extremes on both sides.
Do you buy talk that we get a vice precidential announcement around the debate, or are they just
can I do a human shrug emoji?
Bait in the water here? Yeah, you did. That was good on YouTube. Who knows? It's Trump. He'll decide in the moment.
Exactly. Trump may have said to somebody who told NBC, yeah, I'm probably going to do it before the debate. But then he might wait. If he does badly tomorrow night. If he does badly tomorrow night, he may want to change the narrative quickly and announce a VP. If he's scared that he's going to do badly, maybe that's right, and he'll announce it earlier in the day to change the headlines ahead of the debate. Yep. But as with all Trump decisions, there is one person who knows what he's going to do and when he's going to do it, we've learned, and that's Donald Trump.
That's right. How about Joe Biden? Is he up there in the back of the tank at Camp David waiting to be,
pounding Red Bulls?
I don't know. They're talking about drug tests before this thing. How does he compose himself? It's going to be so much about body language. We're going to see them walk out. Yeah. People are going to be making judgments before he even opens his mouth.
Right. I do think they're going to try to get him rest and a good night's sleep ahead of time. But we saw at the State of the Union that the Joe Biden that we remember from decades past is still in there. And if State of the Union Joe Biden shows up and is aggressive and sparring with Trump the way he sparred with House Republicans that night, he'll do great. He'll assuage a lot of worries among Democrats there's still the worry that he's too centrist, not liberal enough, or too liberal and not centrist enough. But if he shows up strong and in charge and at the podium and follows the rules and stops talking when the mics are cut off, he's going to do great. Trump, on the other hand, who is having policy time but is not really practicing speaking to the sound bites, we understand, may have a lot of trouble with that time with the time constraints that the CNN is putting on the debate.
What could Joe Biden drop? You talk about Donald Trump with a VP announcement. I mean, what kind of news could Joe Biden make? Would it be a shift in Israel policy, a ceasefire? Is there something they're working on right now so he has a nugget when he walks in there too?
Well, there's a lot of maneuvering going on. They've spent the week highlighting their accomplishments. They've done they've had calls about housing accomplishments and the Inflation Reduction Act and things like that.
Rolled out some pardons.
Rolled out the pardons, yes, of the military guys, or military personnel who were thrown out for being gay or lesbian have now been pardoned. He's doing a lot of good things he can announce. Whether, I don't know if it's really his style to come out with a big announcement.
Right. It's kind of different for an incumbent, though, right? Because Donald Trump can promise anything. If you're the president, you kind of have to face the reality of the tools you have at hand.
And there's a problem with history. Apparently, incumbent presidents do not do as well in their re-election debates.
How true.
Partly because just what you said, they're already president. They have they have the infrastructure. They have.
What have you done for me lately?
Yeah, exactly.
You've got to think he's had a phone call or two with Barack Obama about the way that first debate went with Mitt Romney. Romney, right?
Oh, I'm sure.
I mean,
I'm
lessons
sure he
learned
did.
here from inside the family.
Yeah. I mean, in that debate, that's the famous one where Mitt Romney said Russia was a great geopolitical threat. Yes. Russia now is a great geopolitical threat.
And he said the 80s called and they want their foreign policy back.
Yeah.
I'm surprised we don't see that replayed more often, considering what's happening in the world right now.
It's true. And I think eventually there were a group of reporters who apologized to Romney years later for making fun of that headline.
It's funny how the world can shift under your feet, I guess, whether it's politics domestically or geopolitics. We're going to get an update on the news coming up here in just a moment with Amy Morris. Wendy, what are you going to be watching tomorrow night? Like, how do you approach this as a political news editor? When you sit down, what's your focus?
I think the focus is whether they can show enough discipline to follow these hard rules, whether they can treat each other with mutual respect, whether they can go out there and try to quiet the noise and just tell us what the years 25 to 29 are going to be like for us.
That's substantive, though.
That would be
where everyone else is looking at body language. That's an interesting answer.
There's all that fun stuff, too.
We'll be popping corn here with Wendy tomorrow night. Are you going to be around for this? Can we talk about it after?
Yeah.
Special coverage starts at 8 o'clock here. The whole team will be in place for Bloomberg TV and radio. We'll be right at this desk. David Gora will be in Atlanta, where the debate is happening here, and it's going to be quite a night here. So thanks, as always, Wendy Benjaminson, Washington, senior editor with us here at Bloomberg. I'm Joe Matthew in Washington. We're going to get an update on the news right now. Amy Morris is standing by in the Bloomberg 99.1 newsroom here in Washington with more. Hi, Amy.
Hi, Joe. The big news today, of course, the decisions coming down from the Supreme Court. The Supreme Court clearing the way for the Biden administration to contact social media companies when it wants to take down posts that it sees as misinformation. The 6-3 decision is tied to government efforts taking down posts about COVID-19 and the 2020 election. Bloomberg Law host June Grosso reports the justices decided the 2 states and the 5 residents who challenged that government rule lacked legal standing.
Justice Amy Coney Barrett, who wrote the majority, said that the Fifth Circuit here was wrong in some of the analysis that it made, and that they couldn't really show that it was the government that injured the plaintiffs at all these different points.
Bloomberg's June Grosso. So this was not about the merits. This was about legal standing. In another 6-3 decision today, the High Court pared back a federal corruption law, saying that state and local officials who accepted gratuities are not covered under the federal statute. The justice's concern over prosecutorial overreach, though, could have implications for other criminal cases from the January 6th Capitol riot. Now, that's a case, along with the case to decide whether Donald Trump has presidential immunity over crimes he's accused of committing while in office. Those are both also still pending before the Supreme Court. After years of avoiding extradition, WikiLeaks founder Julian Assange has admitted his guilt in obtaining and publishing U.S. military secrets. The plea deal was negotiated by the Australian government, and it means Assange had to admit guilt to a single felony count. Australian Prime Minister Anthony Albanese says that Australia did what any country would have done for its citizen, and the judge citing Assange's 5 years behind bars in the UK, he called that time served. That allowed him to go free and return to Australia. Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are struggling for direction. We got the S&P right now swinging between gains and losses, up barely, up by half a point right now. Little change. The Dow up 47, up 0.1%, and NASDAQ up 49, a gain of 0.3%. Has been a strong quarter, though, that has seen a small group of high-flying tech shares lead the way, but NVIDIA moving lower today, dropping now by 1.6%. We've got the 10-year yielding 4.30%, with a 2-year at 4.74%. Gold down 0.8%, 2,300 even the ounce, while West Texas Intermediate crude up 0.1%, 80.90 for a barrel of WTI. New home sales slumped in May, and with more, here's Bloomberg's Vinny Del Giudice.
Wall Street had anticipated a gain thanks in part to buyer incentives. Nope. What we got was an 11% drop in May new home sales, the slowest pace since November. The trouble is chronic. The highest mortgage rates in 2 decades and a median sales price topping $400,000. American families in many cases are priced out. Last week, the government said housing starts and building permits hit 4-year lows. Vinny Del Giudice, Bloomberg Radio.
Among home builders, KB Home right now trading lower by 0.5%. We've got Lennar, little changed, up less than 0.1%. Toll Brothers up 0.3%. Pulte Homes trading unchanged. Again, recapping, stocks higher, little change. Perhaps the key takeaway at this hour, with the S&P up by 1 point, 10-year yield 4.30%. Balance of power continues. Lots to digest the day after the primary election. And once again, your host on Balance of Power, here he is, Joe Matthew.
Thank you, Charlie Pellet. We'll get back to Charlie a little bit later on this hour, see how Wall Street is looking here with his eyes on the markets for us, always on the fastest show in politics. Yeah, it's the morning after the primary and the day before the big debate. And we spent some time already this hour talking about who's going to be there, Donald Trump and Joe Biden. Talk a little bit now about who's not going to be there, even though he'd rather be. We can start with RFK Jr. on that one. It's been a minute since we've had some time with Gregory Cordy. He's with us now, Bloomberg Politics reporter. Welcome back to the desk. It's great to see you, sir. I'll be curious to hear your plans for the watch party tomorrow night. But RFK Jr. thought he might end up on this stage. He thought he had the polling to support it. He does not have the ballot access to support it. Is that why he's not going to be there?
Well, it depends on who you ask. Okay. He says he has met the criterion for both. Okay. The criteria is you have to be on the ballot in enough states to get you to at least 270 electoral votes. So that, of course, is the magic number that you need to be elected president of the Electoral College. He says he's well in excess of that. The problem is he's filed his petitions to get on those states, but they haven't yet certified. Kennedy would argue, hey, look, Donald Trump and Joe Biden aren't on the ballot in 270 electoral votes either, because they're not their party's nominees yet. Okay. They are the presumptive nominee. Yeah. That will probably happen. But yeah, he's been making a big stink about this. But the long and the short of it is he will not be on the stage. Yeah, and that's probably good for both Biden and Trump, because elevating that third candidate, as we saw with Ross Perot in 1992 and 96, that we saw with John Anderson, if you want to go all the way back to 1980, really sort of gives people another choice and another sort of frame to judge these two guys. Sure. And honestly, with as many people disliking Trump and Biden as there are out there, having that third option might be appealing to a lot of voters.
We've got breaking news, Gregory, and I didn't think we'd be talking about this today as we spend time with Gregory Cordy. The Supreme Court, I'm just reading this on the terminal now, poised to allow emergency abortions in Idaho. This is an important case that we've been waiting to hear. And of course, as we told you a little bit earlier on today, the Supreme Court issued its rulings. We discussed one of them with Eric Larson on social media and the Biden administration's attempt to influence